Hooty hoo! Welcome all my stock market gamblers. Today is Monday, August 24th, and I want to talk a little bit about real estate today. Now, real estate is tied to the stock market. I don't care what anyone says. Anyways, what we got here is an insane market. Okay, so we got all these unemployed people, right? We got 30 million of them all across the nation. Anyways, prices in real estate are going up. They're going up. Haven't you heard? We hit a new record high, $330,000 for the average price of a home in the U.S. Real estate prices are on the move. Oh, not so fast. Don't be fooled. This is actually something I know a little bit about. Anyways, I've been a real estate broker in the Bay Area for over 40 years. All right, we're seeing some very interesting things going on right now. Very interesting changes happening. Now, I actually live in the South Bay, down by the Apple Computer campus. They call that the spaceship, I guess. But anyways, down here, we've had this demand for houses, and it's just propped up houses so high. The demand is still there, okay? Anyways, there's still people looking for houses. But there has been inventory coming on, but the inventory that comes on is selling still, even now, in the middle of a pandemic, 30 million people unemployed, real estate prices are sky high, interest rates are record lows, houses are still moving through in the South Bay. But here's the thing, here's what I want to talk about. Anyways, the inventory in San Francisco, which is a little bit north from me, anyways, the inventory up in San Francisco has almost doubled year over year. Okay, so things are starting to slow down up there. Now, rents in San Francisco, I'd actually say they're kind of plummeting. They're dropping. Anyways, 15-20% down. They're offering incentives to move in, 2 months free rent if you sign a 1-year lease. I mean, things are starting to soften a lot in the rental market in San Francisco. Even here in the Cupertino area where Apple's located, rents have come down 15 to 20%. Now, why is this? Why are rents coming down, but we still got inflated house prices? Well, here's what's happening, okay? So anyways, if you're renting and Apple says you can work from home for the next 2 years because of the virus, okay, are you going to stick around here and pay $3,000 to $5,000 for rent? Or are you going to move out to Stockton, Sacramento, Lake Tahoe, and get your rent cut in half, basically? Well, anyways, everybody is bailing, okay? So we got all these empty apartment buildings. But if you're an owner, you have to sell your place first before you can move. All right, so anyways, now up in San Francisco, the inventory has doubled. So now if you're an owner and you want to sell, well, not so fast. Who's the buyer? Who's the buyer? Anyways, you still want to get top dollar. Everybody's a little bit greedy. They always want to get that top dollar. They want to get full price. Well, which is great. I can't blame them, but I get underneath the market really fast because this thing's coming down. People are still up here and they're going to chase this market down if they're a seller. They are. Believe me. Watch this. I've seen it before. You got to get underneath the market so your house the bid gets hit. You're up here, there's no bid. It's not going to happen for you. Get underneath the market, get it sold, move on with your life. This is my advice. I mean, we got rents just plummeting. 20% is a big drop for the Bay Area. I mean, I don't ever recall it dropping 20% in rents. I mean, yeah, I just don't recall that. And like I say, I've been here a long time. Now, anyways, what we also have, now this is fascinating. Okay, now we got houses still selling in many areas. Sacramento area is booming. I had a friend, he sold his down here, and he moved up to Sacramento trying to get out of the Bay Area. Well, there's 17, 18 offers on each home that's for sale up there. It's crazy in Sacramento right now because everybody's fleeing the Bay Area to move up there. All right, because it's cheaper living, they take the money here and they go up there and they pay all cash and it kind of bids it up. Don't get suckered into this. Let me explain this. Okay, so right now, what we have is this thing called forbearance. Forbearance. All right, it's basically 9 million homes where people aren't paying their mortgage, and forbearance is the big word they use. They're not in default, they're in forbearance. Let me tell you, they're in default. These are delinquent mortgages. These are in default mortgages. If you put 9 million homes onto the market that go into foreclosure when the forbearance period ends, you're going to have a massive price drop. The demand's going to hit. It's going to flood. Now, what I've got is a lot of clients right now. A lot of my past clients, they want to sell, but they're afraid to have people come into their house because of the virus, but they have to live in the house to get the money so that they can move. So they're holding off on putting their property on the market. As soon as they feel safe to do it, they're going to rush and get their property out there. And there are a lot of people like this. There's going to be a lot of inventory coming onto the market, flooding the market. Prices are going to drop, I'm telling you. Take my word for this. Now, this isn't going to happen next week. It's not even going to happen next month. This is going to take years to play out. It's going to start in 2021, and it may take 2, 3, 4 years to play out before we hit a bottoming period. But you're going to keep seeing the market going down, down, down. Anyways, if you're a seller, you want to get underneath it so the bid gets hit. You don't chase the market down. You're going to be chasing it down otherwise. But anyway, so we have a record number of mortgages that are in delinquency. Okay, so we're at an all-time high there. Now, true, interest rates they're dropping. They may even go negative. They may pay you to buy a house. That's how bad the market's going to get. They might actually pay you to buy a house. Now, isn't that crazy? Now, anyway, so we got mortgage delinquencies, record highs. But here's what we got. We got home builder sentiment also at a record high. Now, why are they so optimistic on the housing market? I'm telling you, it's because it's their business. Now, look it. I've been a realtor for 40 years, and nothing against the National Association of Realtors, but if you get a spokesperson from them, they're always going to be positive. They're never going to say it's a bad housing market. They're going to say, no, look, 30 million people are unemployed. Well, guess what? They have more time to shop for a house now. They say things like this, and I mean, sometimes I can't believe what I hear. Last I heard, you actually need a job to buy a house. Well, maybe not. And now, I take that back. They used to give loans to anybody. I mean, if you're breathing, you could get the loan. I mean, I remember when I didn't, like I say, I'm probably making, less than $20,000 a year, but I had some cash in the bank, so I could walk in and put 20% down. They'd give me a loan on anything I wanted. Well, anyways, be careful in the real estate market. Now, back to stock market gambling. I'm going to tell you about what I use to short the real estate market. It's called the SRS. The SRS, it's a leveraged ETF that's short real estate. Now, don't buy it right now. Don't buy it right now. The timing's not right. And this thing has time decay. Just put it on your watch list. Put it on your watch list. I think it's selling around somewhere around $15. But anyways, as it starts dropping, and as this pandemic that we're in right now starts to clear out, and people start to put the inventory onto the market, that's the time to pick up some SRS and take a shot. You can't stay in this thing very long. It's got time decay. I mean, you want to stay, maybe 2 to 4 weeks at the most. And if you time it right, you can go boom, 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 boom. Remember, this isn't advice. It's not financial advice. I'm just a gambler. I'm a stock market gambler. Yes, I've been a real estate broker for, 40 years in the Bay Area. So I do know a little bit about real estate. And I'm just saying, be careful out there. Be careful out there. Real estate's very localized to the Bay Area, localized to Texas, localized to Arizona, where you live. Every market can be different, but I'm telling you, if your market's got rents coming down, dropping 15, 20%, the home value, the prices are going to follow. Inventory is going to flood that market soon. So just take it for whatever it's worth. And anyways, that's all I got today. Hooty hoo! Go out there and do some stock market gambling. And we'll talk really soon.